Investors ran for cover today as $27 billion was wiped off the value of the local bourse in the worst day of trading of the year. I spoke to our bull, Charlie Aitken from Bell Potter Securities, a little earlier. Well, Charlie Aitken, political upheaval in Europe and Wall Street in decline. Was this the fallout that you were expecting on the local market?
Well, not when I went to bed on Friday night, Ticky, but we have a saying in the trading desk that even the pretty girls get hurt in the bus crash, and that's unfortunately what happened today. With selling indiscriminate, futures-led, no one really escaped, and the market predicting quite big falls in Europe and the US tonight. But you have to take into account that it is Sunday night, early Monday morning in America and Europe at the moment, so what the futures predict is not necessarily what comes, but it was a very tough day. Resource stocks particularly hammered. I guess there's no surprise there. Well, there is a bit of a surprise. I find it a bit strange that BHP loses 4%, Rio 4%, Fortescue 6%, Atlas 6%. I could go on forever about this, on the outcome of a French election, which just really has nothing to do with commodity demand in Australia, but has everything to do with risk. And the perception that risk was coming off, resources are seen as risk, and back we are down to the sort of lows of 3 months ago in some of these resource stocks. So I find it a little bit surprising, but that's how the market works in the short term. Any safe havens for local investors? Well, relatively, and that's a bit of a broker cop-out for saying it went down less than everything else, but stocks with high dividend yields outperformed obviously stocks with low dividend yields. When I refer to the miners before, most of those have low dividend yields, so there's nothing really to support them on days like that. Banks generally outperformed today, Telstra, some of the industrial services companies, property trusts, but look, I can only use the word relatively there. They're all down, but just less than other things. Got to ask you about one standout company. Leighton Holdings has pushed out the completion date of the Brisbane Airport link. Was it singled out as a stock? Oh, not really. I think the stock was down for other reasons today. I think that might have been broadly ignored by the market, Ticky. Mining services stocks tend to track the mining companies. When the mining companies are having a bad day, the mining services stocks have a bad day. This has been going on for a few days now in mining services on negative revisions to CapEx intentions in Australia. So Leighton is seen as a big mining services stock. It lost 3% today, but it was certainly not alone in that space. I'm sure it'll be after the budget before it starts settling down. Charlie Aitken, thank you very much for talking to us. Thank you, Ticky.